Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, to discuss what drives stock returns. And it's not always earnings. And Phil, this is a great conversation to have because it's on top of everyone's mind, trying to determine valuation and how stocks are getting to where they are right now.
Yeah, that's true. And we've had a reasonably good year despite all the bad economic news. And so it's kind of interesting to see what's justifying the prices that we've got right now. And we talked a week or so ago about the fact that some research showed around about 80% of all stock moves are driven by earnings changes over a long term. But what we're looking at today is what drives stock prices on a year-by-year basis. And you can see, like back in 2016, 2017, it was mostly about earnings changes and earnings growth that drove the market up. So the blue boxes pretty much explain where the blue dots get to. But in the last couple of years, the rally in stocks has really been more about multiple expansion, so price earnings looking richer. And so when you think about that, a lot of that is to do with the reduction in interest rates. So we've also talked before about valuations, actually where they are kind of being justified by the negative real rates and the extremely low interest rates, because those are used as discounts for the future cash flows, which makes the future cash flows worth more if you're doing a DCF type valuation for a stock. And you can see quite clearly that this year earnings are down, the stock market's up, and pretty much the multiple expansion is explaining it.
Well, we did get some V-shaped data, which was good to see.
Yeah, I mean, this is the reason the market's up too, is there's a lot of V-shaped data, which makes it look like things are going way better than things like underlying employment would indicate. Underlying employment is still well below the normal levels, but we're seeing manufacturing is pretty strong. We've talked recently about the fact that home sales is really strong. And so you can definitely see there's aspects of the economy that are doing much better than expected. The one thing to highlight, though, is the PMIs and the ISM indexes. 50 is same state, below 50 is contraction, and above 50 is expansion. So they're not levels, they're rates of change. So we're kind of recovering from a very low level. The total levels of manufacturing, still not back to normal pre-COVID levels, but the direction is positive for the last 3 or 4 quarters, which is good news.
All right. And finally, we wrap up here with some historical data dating back to, it looks like the 1300s on various diseases we've had to contend with.
Yeah, there's actually the plague of Justinian in 541 AD. So, I mean, this is a really interesting chart for a couple of reasons. One is it proves that we've had plenty of pandemics before. And I think the interesting thing about that is last year, we didn't walk around worrying about any of these pandemics. So I think once we get over COVID, a lot of the things that we used to do, we'll probably get pretty comfortable with relatively quickly. We just need to get the health situation sorted out, whether that's working out how to treat it or getting vaccines that are effective throughout the population. And so the other thing that I think stands out is looking at the date ranges for a lot of these pandemics. They're often 2 odd years long. So the people are talking now about the vaccines potentially being approved late this year, early next year, but distribution taking a bit longer because of 300 million people in America and the billions of people in the world are going to need to have a vaccine produced for them. And so that's going to take, potentially 6 months to a year to get through a lot of the economies. And that's pretty much in line with what we've seen in the past. So I guess the other good news is it's not that abnormal. And thankfully, if we look at this list, it's not likely to happen again for 100 years.
Well, it certainly is encouraging to have a full broadcast today with lots of positive news. Phil, thanks so much for joining us on Trade Talks.
You're welcome, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.